In addition, Rosby relocated one of its companies from the suburbs to a city neighborhood desperately needing jobs. This is an example of how our lending has significant impact beyond the loan itself. One of the most dramatic Cleveland sustainability stories is the Glenville Enterprise Center, which is the largest development undertaken by our nonprofit, ShoreBank Enterprise. And when I came to Cleveland with ShoreBank, my first job was to continue to develop and lease this facility. It was a torpedo factory that had sat idle for 15 years, a neighborhood eyesore. There were a couple machine shops still operating in a corner of the building, but the rest was abandoned. And at 10 o'clock in the morning, the lot was almost empty. With help from local foundations and through much blood, sweat, and tears, mine and others in this room, we cleaned up the environmental issues, and the building has been transformed into a vibrant center. It's 85% occupied, with about 40 businesses and nonprofits. Tenants include a high-end cabinet maker, a charter school, and our bank. And today, it can be hard to find a parking space at 10 o'clock in the morning. So, we've talked about the important impact that CDFIs have in our urban communities, both for residents and businesses. But we haven't yet talked about the how. How are we able to be successful in distressed communities? The key to our success is that we use both a high-touch and tough-minded method of working in our communities. In other words, we do banking the old-fashioned way. While we do look at credit scores, we don't rely on them entirely in our underwriting. Instead, we do our own inquiry through many personal meetings with borrowers. If you want to borrow from us, we're going to get to know you, the home or business, and the neighborhood. Our high touch is labor intensive. For example, we have property valuation experts, and we know the local rental markets, so we can advise clients on how much rehab work a property can support and remain affordable. We're also tough-minded. We have strict underwriting standards. We verify income. We offer fixed-rate, long-term loans. Novel concept, right? Fixed-rate, long-term loans for homes and businesses, and avoid the risky adjustable-rate mortgages. We require taxes and insurance to be escrowed. Our customers often pay us first because they trust us and they want us in their lives. And we trust them and want them in our lives. And before the predatory lending hit our neighborhoods and Wall Street's leveraged investments hurt our economy, our way of banking was profitable for the great majority of the last 36 years. But the triple threat of declining home values, high unemployment, and tight credit has hurt our bottom line. This is not the first recession our bank has weathered, but the extensive impact of this financial crisis has been a game changer, because there is simply no model for how banks that did things right can recover from the devastating impact of those that did things wrong. Because we now have a domino effect that has disproportionately hurt urban neighborhoods, small businesses, and nonprofits. Which leads me to the ongoing debate over what caused the mortgage debacle that led to the nation's biggest financial crisis since the Great Depression. The many pundits and experts have many viewpoints. Some have said it was insufficient regulatory oversight. Others said it was bad bank management or aggressive predatory marketing to cash-strapped homeowners. Brokers gone wild. Securitization gone wild. And a couple financial columnists said the biggest culprit was the Community Reinvestment Act because it made banks lend to poor people. As you might imagine, I'm definitely going to take issue with that last view. Well, it's good to know that when all is said and done, One of the nation's top bank regulators, FDIC Chairwoman Sheila Bair, summed it up best. She said, "To be sure, there's plenty of blame to go around. However, I want to give you my verdict on CRA. Not guilty. Point of fact, only about 1 in 4 of higher-priced first mortgage loans were made by CRA-covered banks during the heyday years of subprime mortgage lending. The rest were made by private independent mortgage companies and large bank affiliates not covered by CRA," end quote. Chairwoman Bair also said that while CRA isn't perfect, it stayed around for more than 30 years because it works. Like many CDFIs, we originate our loans, keep them, and service them. If an issue develops regarding a borrower's ability to pay, we get in touch immediately to work with them before the situation reaches a crisis. We also stuck to conventional mortgages, bypassing the hundreds of exotic, risky products offered by others. And despite having more than 80% of loans in low-income communities, our loan loss in 2008 was less than 1% of outstanding loans. So, where do we go from here? Well, we can begin by inspiring more banks to adopt the principles and missions of CDFIs. This type of lending will help seed what I call an inclusive recovery that will make all communities, both urban and suburban, stronger. In Ohio, members of a task force of state legislators and development advocates recently said that Ohio's urban centers are the backbone of innovation, commerce, and quality of living. The task force also concluded that redeveloping and strengthening our cities is critical to ensuring future prosperity for Ohio as the national recession lifts, because the benefits will spread throughout the region. Second, we must always seek to collaborate with like-minded organizations to appropriately leverage scarce resources. We already have successful examples of how collaboration between banks, nonprofit organizations, and other partners can pave the way for inclusive prosperity. Just last month, The Economist magazine highlighted the Greater University Circle initiative here in Cleveland. This is a collaborative effort between the Cleveland Foundation, several nonprofit partners, including ShoreBank Enterprise. This project has seeded businesses located in neighborhoods adjacent to the prosperous University Circle neighborhood. These businesses are creating jobs and building wealth for those neighborhoods, while supplying goods and services to the nearby cultural institutions and economic anchors like the Cleveland Clinic, Case Western Reserve University, and university hospitals. To me, this is a perfect example of how to spread the positive effects of a city's strengths and neighborhoods to challenge neighborhoods nearby. One of the businesses is a commercial laundry that uses green technologies and hires local residents as worker owners. It's located, by the way, at the Glenville Enterprise Center. Also, for some CDFIs, taking deposits has been a critical and relatively easy way to form collaborations. Since its inception, the bank has worked to attract funds from beyond the neighborhoods it serves. Over the years, raising deposits has absolutely helped ShoreBank reverse the flow of capital. Let's call it greenlining, the opposite of redlining. Banks like ours import funding by gathering deposits from local and national marketplace and deploying them as loans in the communities we serve. CDFIs like ShoreBank have invested billions in underserved areas since the 1990s, and that's been made possible by these mission-driven deposits. We appreciate the strong support from banks in Cleveland that have kept significant deposits with us as part of their CRA strategy.